Hey guys, welcome back. Now, Cathie Wood has just given her latest market update, and interestingly, we've had not one, not two, but three big business leaders all give warnings about the economy. Now, just note that even though we're going through many problems right now, including war, raising interest rates, and inflation, the S&P is still only down 13% on the year. That's not even officially a bear market yet. So the question is, are things about to get much worse? Well, in this video, we'll be taking a look at the most recent update from Cathie Wood, and we'll also find out what Elon Musk, the CEO of JP Morgan, and the president of Goldman Sachs are all giving warnings about. And then we'll finish up with Cathie Wood giving her latest Bitcoin and crypto market insights, as there is something very interesting going on with the long-term hodlers. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, according to the CEO of JP Morgan, Jamie Dimon, there is a hurricane coming to the financial market. So what is going on?
We've had some very interesting comments on the economy by business leaders. Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy. And we're trying to figure out what he's looking at. We know his own sales were up. Tesla sales in the month of May, I believe, were up globally 60%, and almost every other auto manufacturer's sales were down, and some of them down by a lot. So it's not his own sales, except perhaps at the margin, maybe something that he's seeing in orders. He may be reflecting on the decline in total auto sales. So that's interesting. Jamie Dimon at JP Morgan talked about a hurricane. Be prepared for a hurricane. He doesn't know what kind of hurricane. Is it going to be a mild one, or is it going to be a Hurricane Sandy, which would be quite serious? But I think he's changed his tune a bit in the last month since JP Morgan reported earnings. So what is he saying? Well, he sees a lot of business activity and must see it slowing down, if I had to guess. And the president of Goldman described this environment as a confluence of shocks that in his career has been unprecedented. So again, he has a very good perspective, global perspective, every sector. And so I would say at the margin, these three business leaders are seeing the economy in some form of stress.
So obviously this doesn't happen very often, that we get three big business leaders all come out in the very same week and give warnings that the economy is likely going to be getting much worse. Now, with the news headline, we don't actually get to hear the tone of the person speaking, so sometimes it can be a bit misleading. So I went out and I found the clip from Jamie Dimon, CEO of JP Morgan, and to be honest, he does genuinely sound a bit concerned. Check it out.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And it's you better brace yourself.
He definitely does not sound bullish, right? There is a hurricane coming. The only question is how destructive it's going to be. Then also this week we had Elon Musk on Twitter coming out and saying all employees can no longer work from home and that he'll likely be cutting 10% of his employees, which is common during economic downturns. Now, in my last video, I coincidentally went through why I believe a bigger crash is still yet to come, where I go through Jerome Powell's dilemma, which is all about managing a stock market crash versus managing inflation, which you can check out here. Okay, and the other big update from Cathie Wood this month was their introduction of their Bitcoin and crypto market report, which they'll now be doing on a monthly basis. And it did show some very interesting insights.
For the first time in Bitcoin's history, we've seen 9 consecutive weekly declines. And so when we first looked at that, I think the tendency was to say, uh-oh, that's really negative. My question to the team was, well, could it be oversold? Could the rubber band be stretching here? Or is there something wrong? And we don't know the answer to that, so we put that in neutral category, and you'll see we'll put each of these metrics in bullish, bearish, or neutral. Bitcoin has gone down from in the last month just from 40,000 to 30,000. Another reason is the high correlation with the NASDAQ. Now, interestingly, in the last week or so, that correlation broke down a bit. The NASDAQ had a few really good days. Bitcoin did not. So there's something else bothering Bitcoin. It is down 57% since its high at almost $70,000 in November. Its 200-week moving average is 22,000. So today we're at 29,000, I think. Its 200-week moving average is at 22,000 and rising. Now, the reason that particular number is interesting to us is we initiated our first Bitcoin position at, back then, it was the 200-week moving average. It was in the $225 to $250 range. So we've come a long way since then. But that has proven to be a nice support. So that's also interesting. A couple of other points I'll just highlight, and you can see in the report. It appears that the short-term holders, and you can see everything in this ecosystem. The transparency is amazing. It does appear, according to our metrics, that short-term holders have capitulated. That's very good news in terms of putting in a bottom. Long-term holders are at an all-time high at 65.7%. That means they've been holding Bitcoin for at least a year. We've got some very strong holders or hodlers here. That's also very good news. Although we might see some long-term holder capitulation to mark the bottom.
So to finish up, 2 quick charts, which is what she was referring to. This first one shows that it is the short-term holders that seem to have capitulated. And it's a very good chart. So in purple, we have Bitcoin's price in the background. This green line shows the overall market average. And then in red is the short-term holders. And then this dotted line here shows at what point they're in profit or at a loss. So very interestingly, the market average is now coming down and it's very close to being at break even. I think the market average is around the $24,000 mark for Bitcoin. But as you can see, it's the short-term holders that are now in a loss. And it's these guys that have held for under a year, which seem to have capitulated. And the other big lesson behind this is that if you hold cryptocurrency for less than 1 year, it's way more likely that you'll be in a loss. So you've just got to hold crypto for a couple of years. And you'll notice the market average, the vast majority of time, you will be in profit. And then the second chart, and this shows that the Bitcoin hodlers have never been more long-term focused. So again, purple, we've got Bitcoin's price here, and then this line is the percentage of the supply that was last active over a year ago. So what it shows is that all the people holding Bitcoin for over a year has now come to an all-time high. So it's showing that long-term holders, people that have had it over a year, have never been more bullish. But the question is, will an even bigger crash force the hands of the long-term holders? Time will tell. It's not very often that we get not one, not two, but three big business leaders come out and all give warnings about the economy. We had Elon Musk saying he has a super bad feeling right now and looking to reduce Tesla's headcount by 10%. We had the president of Goldman Sachs saying there are unprecedented shocks coming, and CEO of JP Morgan saying a hurricane is right outside and the only question is how bad it's going to be. Bitcoin is now down 56% from its all-time high, but the more positive news was that it looked like it was the short-term holders that have capitulated. All the people who have been holding Bitcoin for over 1 year have either been buying or hodling. But the question is there, will there be another crash which will then force the hands of the long-term holders as well, which historically has marked the true bottom of the market? So there you are, guys. I hope you enjoyed. Now, are these big business leaders right? Are things going to be getting much worse? Let me know your thoughts below. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.